Ever wondered what candlesticks are telling you? Do you also want to decode the market moves? Let's reveal their secrets in seconds. Watch the video till the end. In the stock market, a candlestick is a type of chart used to show price movements over a specific period. Each candlestick displays the opening, closing, high, and low prices, helping traders analyze market trends and make informed decisions. Here are the single candlestick patterns which we are going to see in detail, namely hammer, inverted hammer, shooting star, hanging man, doji, dragonfly doji, gravestone doji, and spinning top. A Mariboso is a special type of candlestick that shows strong buying or selling pressure in the stock market. Bullish Mariboso, this candlestick is completely filled, showing that the stock opened at a low and closed at a high with no upper or lower shadows. It means buyers were in control all day, pushing the price steadily up. A strong sign of potential upward trend. Bearish Maribosu, this is the opposite, where the candlestick is fully empty, meaning the stock opened at a high and closed at a low, again with no shadows. This shows sellers were dominant, pushing the price down, a strong indicator of potential downtrend. The hammer and shooting star are often seen as signals of potential trend reversals. Hammer. A hammer appears after a downtrend and has a small body with a long lower shadow but little or no upper shadow. This pattern suggests that even though sellers push the price down during the day, buyers regain control, pushing the price back up. A hammer indicates a potential bullish reversal. A shooting star shows up after an uptrend and has a small body with a long upper shadow and little or no lower shadow. This pattern indicates that buyers initially pushed the price up but sellers gained control and drove it back down. A shooting star suggests a possible bearish reversal. The inverted hammer and hanging man also help the traders identify possible trend reversal. Inverted hammer, this pattern appears after a downtrend and has a small body with a long upper shadow and a little or no lower shadow. It shows that buyers tried to push the price up during the day but sellers resisted. However, the presence of buyers signals a possible reversal to an uptrend, making the inverted hammer a potential bullish reversal indicator. Next is the hanging man. The hanging man appears after an uptrend and has a small body with a long lower shadow and little or no upper shadow. It indicates that sellers pushed the price down during the day but buyers managed to bring it back up. However, the selling pressure can be a sign of weakness, hinting that the trend may soon reverse downward. The hanging man is often considered as a bearish reversal signal. A spinning top is a candlestick pattern that indicates indecision in the market. It has a small body, meaning the opening and closing prices are close together, and a long upper and lower shadows. The long shadows shows that the buyers and sellers were active during the trading period, but neither side was able to gain full control. This lack of momentum often suggests that a price reversal or a continuation of the current trend may be forthcoming. Spinning tops can appear after an uptrend or downtrend. If they appear after an uptrend, they may indicate a potential bearish reversal. If they appear after a downtrend, they may suggest a potential bullish reversal. A doji is a candlestick pattern that indicates indecision in the market and can signal a potential reversal. It is characterized by a very small body where the opening and closing prices are nearly equal and long upper or lower shadows. The gravestone doji features a long upper shadow and a little or no lower shadow, often signaling a potential bearish reversal after an uptrend. The dragonfly doji has a long lower shadow and a little or no upper shadow, indicating a potential bullish reversal after a downtrend. The significance of a doji is often determined by its position in relation to previous candles. For example, if a doji appears after a strong uptrend, it may suggest a reversal or weakening of momentum. Usually, the hammer, inverted hammer, bullish Maribosu, dragonfly doji are found at the end of downtrends. Shooting star, hanging man, bearish Maribosu, gravestone doji are often found at the end of uptrends. After looking at the candlestick patterns, we can understand three types of market movements. Either it is a bullish move or a bearish move or a neutral move. That's it, guys. I think we have had enough talking about candlestick patterns. For more extensive reading, I would recommend you to go through the Japanese Candlestick Charting Techniques by Steve Nissen. It's a great book that introduces the readers to both the visual and psychological aspects of candlestick analysis. Thanks for watching. Don't forget to subscribe the Uno Trader for more such videos.